The Dow Jones tumbled 1,014 points in a single session, while Brent crude oil reached $90 per barrel. Although diplomatic rumors briefly stabilized stocks midweek, the combination of a closed Strait of Hormuz and a 92,000 job loss in the U.S. confirmed a shift towards stagflation. Geopolitical supply shocks have collided with a weakening labor market to freeze expectations for interest rate cuts. Energy and geopolitics. Iran's closure of the Strait of Hormuz disrupted 20% of the world's traded oil supply. Brent crude breached $90 following a U.S. demand for unconditional surrender. Qatari LNG exports halted after drone attacks targeted the Ras Laffan facility. Rising fuel costs drove national gasoline prices up 11.3% in a single week. These energy infrastructure threats prompted a global flight from risk and spiked the VIX fear gauge. Macroeconomic shifts. The U.S. economy unexpectedly lost 92,000 jobs in February, missing forecasts for a 55,000 gain. Unemployment rose to 4.4%, while average hourly earnings jumped 4.4%. This labor weakness coincided with surging energy costs, creating a stagflationary environment. Bond traders pushed the 10-year Treasury yield to 4.15% as inflation risks intensified. Markets now price a negligible probability of a March rate cut. AI sector decouple. Marvell forecasts 2028 revenue of $15 billion due to insatiable demand for custom AI chips. Broadcom shares rose after the company guided for $100 billion in AI chip sales. The trade desk surged 26% following reports of a potential advertising deal with OpenAI. Major tech players signed a pledge to fund their own power for new data centers. However, Oracle and OpenAI scrapped a Texas project due to strategic financing shifts. All-U market rotation. The S&P/ASX 200 lost $107 billion this week as Middle East tensions rattled local sentiment. China restricted state-backed iron ore purchases, causing DAP shares to fall 6.5%. Surging fuel prices drove three-year bond yields to 4.43%, increasing expectations for an RBA hike. Investors rotated funds from the resource sector into oversold Texalds, SEC, and Zero. Defensive Hallow stocks like Cleanway and Transurban saw increased interest. The combination of energy-led inflation and a contracting labor market will keep volatility elevated next week. Persistent fuel price shocks make the Federal Reserve's next policy decision increasingly difficult. Key variables include the March 11 inflation reading, diplomatic developments in the Persian Gulf, and U.S. Treasury interventions. Geopolitical supply shocks remain the primary driver of the stagflationary pivot.